Hey Bowtie Nation, Joseph Hogue here with another one of these news-related videos and an investing theme that is going to become the future of finance and really my favorite growth theme right now. It's bigger than AI stocks, even bigger than cybersecurity, which all of you out there in the nation know cybersecurity used to be my favorite growth theme. But now, Boston Consulting Group estimates this shift is going to create $19 trillion in new market value in just 8 years. That is 31 times larger than today. And I'm going to show you why this shift to stablecoins and tokenization is definitely coming and reveal the 5 stocks that I'm buying right now to get in front of it. Now, against this upside though, we are seeing a second chance for investors to buy in here. So I wanted to do this update video. We saw the largest crypto crash ever starting earlier this month, more than $19 billion in liquidations. That was the most ever in 24 hours. First, from panic selling when President Trump threatened that 100% tariffs on China and those export controls. Then, as that price of crypto fell, investors that had borrowed to invest were forced to sell out. That's caused a cycle of those lower prices and more forced selling. Bitcoin and Ether were both down more than 10% on the day. You can see that here. And some of the other altcoins dropping as much as 54% for hype. Doge, 62%. AVAX fell 70% on that news. We can see here in the charts, while Bitcoin is up for the day, it is still down about 14% from that October all-time high. That October high of $126,000 for a Bitcoin, now at $109,000. On Ether, we also see it's down 23% from the all-time high set earlier this month. That is bear market territory. A bear market crash in Ether just since the earlier this month on that crypto sell-off. Even after that sell-off, though, we're still 27% up on our shares of Grayscale Ethereum Mini Trust, ticker ETH, my third largest holding right now. And I'm going to show you why this, along with those related stocks like Robinhood, ticker HOOD, Coinbase, ticker COIN, Fiserv, FI, even Circle Internet Groups, ticker CRCL, now my favorite growth theme right here. We're rocking gains from 45% on SMCI, 110% on AMD, and up to 165% on Symbiotic in that AI theme, but they're getting expensive here, and none of them have that kind of certainty, the upside confidence I have in some of these stocks that I'm going to highlight right now. First, though, I want to take you through what stablecoins are, what tokenization is, and some of the news leading up to this, and show you why this is the future of finance, why it is going to happen in really probably an accelerated pace over the next few years, why these stocks are going to benefit. So first of all, stablecoins, those are digital currencies backed by dollars or some other currency, right? The issuer, so Circle Internet Group, holds those assets like Treasuries. Okay, so Circle takes the money, invests in US Treasuries to get a guaranteed return and a safety net there on that value, that asset value. It keeps that investment value at $1 each for each of those stablecoins. Then people that buy the stablecoins using them, they can use those in transfers that are instant and almost no cost. Okay, if you've ever done a wire transfer, especially an international wire transfer, those things are expensive. With stablecoins, you can be doing international wire transfers back and forth, instantly clearing and at a fraction of the cost. And then tokenization, this is similar to this. These are like stable coins, but for everything else. In fact, I'm going to show you a quote by Larry Fink, the CEO of BlackRock, the world's largest asset manager, that he says any financial asset can be tokenized. So here you take in the asset, like real estate property, stocks, money market. You hold that asset, just like you did with the currency in the stablecoins. You hold that financial asset in an account and then use the blockchain to issue tokens against that. Just like stablecoins, this is a revolution in cost. How much does it cost to buy real estate? Okay, from the title, from the escrow, all the little costs, the agent costs in real estate. Then the transfer time. It takes stocks 3 days to clear. You think it happens automatically or instantly on your broker platform, but it doesn't. It actually takes 3 days to clear a stock transaction. So this would be nearly instant for tokens. It would be, again, for real estate, that can take months to clear a real estate transaction. These would be instant. The security, how much do you pay for title insurance when you buy a house, just to make sure that that title is to who says owns the house? With tokenization, everything is there on the blockchain for you to see. So it opens up that investment to everyone. It creates nearly instantaneous transactions and at a fraction of the cost. This is the future of finance. And now I want to walk you through my research, the news on this to really confirm the momentum and the direction of this, how this is definitely the future of finance and how it's going to support these stocks. Because I think there's still a lot of people out there that really are hesitant on cryptocurrency, especially with the wild swings it's had over the last 10 years, up and down. But really, what we're looking at here very clear that it is going in that direction, and I want you to be ready for it. Here we see first, following Robinhood's tokenization of more than 200 US stocks and ETFs. So earlier on in the year, the Robinhood platform tokenized 200 US stocks and ETFs, so international investors would be able to buy those 24/7 with lower costs and fees. Now Wall Street's getting in the act with Goldman and BlackRock. Again, BlackRock, the world's largest asset manager with tokenized market funds, okay, saying that this is going to eat the entire financial system. We can scroll down here and see that quote by Larry Fink, the CEO of BlackRock, where every stock, every bond, every fund, every asset can be tokenized. If they are, it's going to revolutionize investing. Again, that's BlackRock CEO Larry Fink, the world's largest asset manager. They control more than $13 trillion in ETFs alone. Okay, so they're going to tokenize these. They've already applied to tokenize ETFs and make them tradable 24/7 at lower costs and internationally across borders. This is going to happen, folks. We got another estimate here for the market for tokenized real world assets. Okay, so remember, tokenization, it's just putting those assets on the blockchain, creating a token to represent it so people can trade it back and forth instantaneous and lower cost. Boston Consulting Group estimates this market for tokenized assets could grow from just $600 billion this year to $19 trillion by 2033. That is 33 times its size in just 8 years. We also see that NASDAQ is working with regulators to introduce its own trading in tokenized securities. Okay, basically, again, putting those stocks on the blockchain so they can be traded 24/7, have that instant clearing instead of having to wait 3 days, and at a fraction of the cost. Now, Robinhood, again, has already done this for its international customers, tokenized some of those US stocks. Coinbase has filed to do this as well, but an approval for the NASDAQ to do this would be huge on its $380 billion in daily trading. And of course, the banks aren't going to be let out because this is the future of finance. We see here 10 major banks, including Bank of America, Deutsche Bank, Goldman Sachs. They're all developing their own stablecoins pegged to the most traded currencies. So not just the G7 nations here, the G7, the largest currencies, but also the group of them, each currency individually. This would save billions of dollars in trading costs and enable those instant transfers. Okay, international transfers. Foreign currency exchange is one of the biggest markets that nobody talks about here in the world. Trillions of dollars traded, and this would revolutionize this as far as the trading costs and that instant transferability. And here we get into the proof that these stablecoins and tokenization is coming. And one, because the government needs them to bail us out, okay? Under the Genius Act, which passed just a few months ago, it sets up a framework for that stablecoin legislation. Actually, the legislative framework for how these are going to be regulated. So here we need to know that issuers like Circle have to back their tokens, those stablecoins, with dollars or short-term T-bills. Okay, so basically, all the money that those companies that issue stablecoins have to use that money to invest in treasury bills. Okay, from that they get that small rate of return, maybe 4 or 5% rate of return that is the profit for the company. But also that pegs that to the dollar. That gives them a guaranteed and safe return where those stablecoins keep that value to the dollar. Now, what that's going to do, that's going to amount to tens of trillions of dollars in buying for government debt, which is going to help force down interest rates. Okay, Treasury Secretary Bessent is quoted as saying here, stablecoins will expand dollar access for billions across the globe and lead to a surge in demand for U.S. treasuries. Okay, that is the key here. That is why the government is fully behind these stablecoins being created and used, because that's going to increase demand for treasuries. That's the U.S. government debt that it issues to pay off, the $38 trillion in debt that the U.S. owes. So that so those treasuries, that is all that demand for treasuries from these stablecoins, that's going to push interest rates down, lower the cost for the government. Okay, stablecoin issuer Stablecoin issuer Tether increased its treasury holdings by 30% over the last year. Okay, research puts the stablecoin market from $2 to $4 trillion by 2035. I think even that is just underestimated. I know this is a lot of research and news, folks, but it just drives home that momentum and the market potential here. And one of the other things cements this for me is the current administration. So the Trump administration, the government has tied its wealth and its legacy to cryptocurrency and the blockchain in a way that, this almost virtually makes it clear that this is the direction we are going to be heading to, at least over the next few years. Here in Wall Street Journal reporting, we can see the Trump family has amassed a $5 billion fortune, and that's just on the launch of its cryptocurrency, the WLFI. We can see that here it reports that President Trump himself and the Trump family owns just under a quarter of all those tokens, so they are not going to want to see those bomb. They also here have other cryptocurrencies. They have Trump-owned trust owns half of the publicly listed Trump Media, okay, so his Truth Social platform, as well as buying and holding cryptocurrencies. The stake in that is $2.5 billion. That is basically just kind of a cryptocurrency treasury company right now because it doesn't make any money. Trump and his wife also owns their own meme coins, Trump and Melania there. So Trump has packed the SEC with people that are going to approve this tokenization, this securitization of cryptocurrencies and these stablecoins. One, because the government needs it to force down those interest rates. It's paying on its debt. But two, because Trump himself and many others in the government are heavily invested in this future of finance that includes tokenization and cryptocurrency. So I'm going to walk you through those 5 stocks I'm buying next, but why I think this is such a great opportunity after the drop in prices this month is because we are going to see a wave of companies in stablecoins and tokenization all the way through 2028. Again, this administration is clearly favoring stablecoins and tokenization, cryptocurrency legislation. So we can't say that necessarily for the next administration. So what companies are going to be doing all the way through 2028, before that next election, they're going to be developing these stablecoins. They're going to be tokenizing assets. So whatever happens in 2028 and with the next administration, they're going to be able to grandfather in any of these changes they've made. That's going to be super fast urgency. It's going to lock in a lot of these changes, and it's going to lock in stablecoins and tokenization as the future of finance. And my biggest bet by far in this is in Ethereum, both directly holding the coin as well as some of the ETFs that I'll walk you through next. But Ethereum dominates the stablecoin market. And while Avalanche and Solana have taken some of that market share, Ethereum was built for this kinds of smart contracts for tokenization as well as the stablecoin market. So Ethereum, it's like the infrastructure on which all this is going to be built, okay? The highway system, and it's going to be collecting tolls every time those stable coins or the tokens are traded, okay? So Ethereum going to be the dominant player in this. Now, the way I have been playing this is not through direct ownership of those Ethereum coins. I do own some Ethereum on Coinbase as well as some of the altcoins that might benefit, like Solana and AVAX, the Avalanche there. But the main way I've been doing this is through the Grayscale Ethereum Mini Trust ETF, that ETH, okay? So that is a trust, that is an ETF, a fund that holds the Ethereum itself and then sells shares in that fund. So it's a very easy way to get exposure to Ethereum or any of these cryptocurrencies without having to have like a Coinbase account or without having to pay the Coinbase fees. And it's very safe, it's secure. This fund holds that Ethereum for you, so you don't have to have like a cold wallet or something like that. So I've been using this Grayscale Ethereum Mini Trust. I've actually been thinking about changing it to the iShares Ethereum Trust, the ticker ETHA, and I'll tell you why here, because look, if you see the ETH, the Grayscale Mini Trust ETF, has average volume of about 6 million shares traded daily. Now, the ETH, you look at this one, and that has 52 million shares traded daily. So much more liquid, much more buying and selling volume there. Now, that's going to be important when we look at options, and that options are really the main reason why I'm investing in these funds instead of directly in the Ethereum itself, okay? Because with those options, I'm going to take you through a couple of strategies here. you can vastly increase your return. You can boost those returns. You can lower your risk on this actually, as well as creating some instant income from these. So what we can do here, we can go into the January 2027 call options. Okay, so now remember what this does is these options give you the right, these call options give you the right to buy ETHA, that Ethereum Trust ETF, at a certain price all the way through to January 2027. So about a year from now. I like using the longer term options just because so I don't have to do this every single month. I collect a larger premium and it really works out better for my strategy. Maybe not for yours, but for my strategy. So kind of play around with this. We're going to talk you through it. But right now we can see that iShares Ethereum Trust ETF there, the ETHA is trading for about $29 a share. We go to these January options and, we can sell. So basically we can buy the ETHA, we can buy the trust that gives us exposure to the Ethereum, to these, to the stablecoin and the tokenization theme. We can buy that for $29 and then go right into the options market here and sell the, sell the $32 call options for $9 a share. Okay, so now what this means is we buy the shares, we own those shares, we sell to another investor these options to buy these shares from us anytime from now over the next year to January 2027 for $32 a share. Okay, the strike price here, they're going to pay us $9 a share right now. So what this means, look at this, $29 minus the $9 we collect, we basically lower our cost of those shares down to $20, okay, almost by a third, okay? We get a 33% discount on those shares, right? So that sets up a huge risk protection. If Ethereum does come back down, then we've only bought these shares for $20 a share. So it's a huge risk downside protection. But what we see here also, if Ethereum does go up, this trust goes up to $32 a share, and that investor uses those call options to buy them from us for $32 a share. They're going to buy it from us for $32 divided by the $20 we paid for it. That is a 60% return. Okay, we just made 60% on those, on those with that call option. And really, it only went up. So if it goes up to 32 divided by where it's trading at now for $29, it only went up 10%. So we can get a 60% return on a stock that only went up 10%. That is the power of options investing, of trading. And you see, you didn't have to take more risk. You actually took less risk, okay? You got a 30% discount on those shares and got a 60% upside protection. Okay, now let's say that Ethereum doesn't go up to $32 a share. It doesn't meet that strike price on those call options that we sold to another investor. The great thing is we keep those shares and the $9 a share. Okay, so essentially 9 divided by the $29 we paid, we keep that $9. We got a 31% cash return, a cash dividend on those shares. We keep the shares. We can sell another set of call options over the next year and just keep on doing that, getting either a 30% return, from the cash that we sell to the contract to another investor, or a 60% return on the year when it goes up. Now, if you're like me, though, and you think that upside to Ethereum is much higher, if you think these shares are going to go up in that stablecoin and tokenization theme, maybe you go up even a little bit higher on your, on your call options, okay? Because again, this locks in the price that you're going to sell those shares for this, okay? So maybe you go up all the way to the $40 per share that you're going to sell those shares. You contract with another investor to sell those for $40 a share. That's your strike price. You're going to collect here that $5.40 that it shows here, that $5.40 premium. So basically you pay $29 for the share, you get $5.40 back from this other investor. You get a 19% return, okay? 19% cash return immediately on those. But what's best here, 29 minus the 5.4. So you paid $23.60 for those shares after collecting that cash premium for those call options. $23.60, you sell it for $40 in the next year, 23.6. You just made a 69% return. Okay, so going a little bit higher up on your strike price, a way to increase that upside potential return. You do get a little bit less downside protection. There we only got an 18% downside protection on it instead of the 30% that we got by selling the $32 call options, but it does increase your upside potential. Now, there are other option strategies to play this. One, I like the long straddle, which is basically just buying a call option and a put option. This is going to benefit whether shares of this ETHA go up or down. Okay, so it's gonna benefit if Ethereum crashes or if it goes up and becomes that future of finance, like we're talking about. A little bit more complicated strategy and a little bit harder to make those returns because it has to overcome the price that you paid for that call and the put option. But I don't want to get too deep into that options investing strategy because I know all the options jargon can be confusing. But again, honestly, folks, if you are not using options as part of your investing strategy, you're missing out on one of the best tools for it to not only boost your returns, like we saw, but also lower your risk and create that cash flow. Okay. So I want to help you get started though. I'm relaunching our ultimate options investing course. Over 3 hours of video. I'm just going to start you with the basics, walk you through all 29 option strategies, when to use each, and how to set it up, including a real world example with shares of Tesla. The course is also going to come with a one-of-a-kind strategy finder, help you find the right option strategy to use, and an options calculator to show you exactly how much you can make. Right now, with that, I'm relaunching the course at a 38% discount. You're going to save $150 off only for the next 3 days during that relaunch window, though. You're going to get all the basics to get you started, the strategy finder to help you make sure you're using the best strategy, the options calculator to show you exactly how much money you're going to make, walkthroughs on all 29 strategies, a 14-day money back guarantee. Okay. $150 launch discount only available though with the coupon code in the link I'll leave in the description or the QR code here. So scan that and check that out. Some of the other stocks I'm buying in that theme, Coinbase here, really the de facto US crypto platform. It's regulated, it has shares, so it's regulated by the SEC. So very much a safer and more stable crypto platform than a lot of these other ones that have frankly been burned before. We can see that Coinbase is still up 29% year to date, even though it's down quite a bit from its high. Their high over $400, now at about $320 a share. So almost a 25% discount to where the shares were just there in July. Now, I like Circle not only as that crypto platform, the de facto US platform, which makes its money on the fees it charges people to buy and sell cryptocurrency, but it also is an early investor in Circle Internet Group, the issuer of the USDC, that main stablecoin there. So it does get a percentage of those USDC profits, as well as the yield on offering those to investors. Robinhood up 250% this year. This is one I haven't avoided until I really got into this tokenization and cryptocurrency theme. Started buying shares of Robinhood up 250% this year, but down from its high of about $153 per share down to $131 now. So again, just a second chance to buy into some of these crypto related stocks. This is quickly becoming the tokenization platform. Okay, so Robinhood has already experimented with tokenizing US stocks and ETFs. It's got about 200 stocks and ETFs that it has tokenized. It's offering to international investors as kind of a test for how that works. This is going to be, the CEO is guiding it that way. This could be one of the first to really expand into those tokenized assets off the exchanges. So real estate, mutual funds, money market funds. Robinhood is going to be one of the first ones to get there. And one of the most hyped here, the Circle Internet Group, which went just ballistic after its IPO, all the way up to about $260, $270 a share. I recommended against Circle at $213 a share on June 30th. Okay, so came out with that, with that video June 30th here. It was about $213 per share. I said it was just too expensive for what this really is, because this is really basically just a bank, okay? But it will benefit from that increase in stablecoins, from that era of stablecoins. It's now at about $125 and getting to where I would be taking another look at it. But one thing that you gotta understand here is, again, Circle is essentially just a bank. Okay, it's got limited profitability because of that. Okay, what Circle is doing? It's taking in deposits. Okay, when you buy a USDC stablecoin, you are giving Circle your money for that stablecoin. Okay, basically it is like a checking account. Okay, you are depositing your money. Circle is taking that money and investing in treasuries and US treasuries mostly. Okay, so it's buying those treasuries. It's getting those rates. right here on the shorter term bonds, the 5-year bond 3.57, the 10-year bond is getting about 4% on those. So it's buying those super safe treasuries to get that return. That is Circle's pretty much its only profit right there, is the return on those, on those deposits, okay, about 4%. So it is a limited profitability because that's you still own that money in that stable coin, that $1 that you invested. It's just making a little bit more than $1 when it invests in these treasuries. But as the interest rates come down, as we're seeing those over the last couple of months, as those interest rates on the treasuries come down, Circle's profitability is also going to come down. So it's going to get hit with that falling treasury return, and it's always going to be limited on its profitability for this. That's why I do like some of these other stocks for that upside to stablecoin and tokenizations. And Fiserv here. Fiserv announced earlier in the year that it would be creating a stablecoin platform for its issuers. Fiserv, one of the largest bank transaction partners here in the world. Really, it is the backbone. It is in the background of pretty much every financial transaction you make with a bank. I did recommend it at about $172 in that June 30th video, preferring it over Circle because I think it's going to have a big upside in that stablecoin era. It is now at $125. Okay, so I think it still makes it into that, an early mover into the stablecoin era. I think it does benefit from that, but I would prefer the ETHA, so that Ethereum trust with the options against it, the Coinbase and the Robinhood stocks in this theme. Get your $150 coupon and learn how to use options to boost returns, lower risk, and create income with our options course. Everything you need to get started: the strategy finder, the options calculator, and all with a 14-day money-back guarantee with the link in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.